So right here I have Ripple because I've got some requests about this cryptocurrency. So in this video, what I'm going to do is I'm going to break down the market structure and share with you what I'm seeing in Ripple and whether I think that Ripple is as bearish as Ethereum and Bitcoin, which are the two cryptocurrencies which I previously did. Now, if you stay with me to the end, I want to show you the key price level that you could potentially pick up Ripple at a very attractive level. Okay, in fact, I want to give you the answer straight away. I want to tell you that 0.69 is a very important key level, but I think it's very important that you stay to the end to understand how I arrive at this level. So it's not just a magical level to you, but you really understand how I get this level. Now, before I go into the analysis, quick pause. Today's video is sponsored by Interactive Brokers. They have very low trading commissions. If you are trading stocks, this is a broker that you want to check out. By far, I've used them and I know that they have one of the lowest. So you could potentially save a lot of money if you are using this as your broker when you are trading stocks. So I'll leave a link to this in the description down below. Now, without further ado, let's go into the analysis. So right here is Ripple. I'm on the daily time frame. Now, what you have to know is that there is a double top pattern. So let me just draw it for you right here. So this is the first top and this is the second top. Okay, so this is the double top pattern. So what is a double top pattern? A double top pattern is when there is a bullish trend and then you have this pattern, and after that, when the neckline is broken, that means that this uptrend is no longer valid. So if you were to just draw in the neckline, you can see that the neckline has already been broken. Price struggled here, up, down, up, down, up, down, and eventually on the 19th of September, you can see that there's a clean break here, and this one further confirms that this entire support is broken. So we are in a bearish market environment, and right now, as of today, which is the 21st of September, price is below this spike low as well. And this spike low is very important because you can see that price rejected it massively. So naturally, this is a very key level that you have to pay attention to. So now price is below this level, which means that price is really very bearish. So if you went long somewhere here, please make sure you cut your loss. Okay, I know it's painful to cut the loss, especially if you bought very high somewhere here, but it is what it is. Okay, now the next thing you have to know is that this is a demand zone. So you have a rally, basing, and rally. So rally, base, rally, and this demand zone seems to be broken. Okay, price has already traded below it, violated this demand zone. So this demand zone is also out of the equation. So really what I'm seeing is that it's a free fall movement between here to at least here, which is the next demand zone. Okay, same concept. You have the rally, base, and then the rally. Okay, again, I covered this on this channel multiple times. If you do not know what supply and demand is, please do a check on my YouTube channel, type supply and demand, and I think you should get that video out. Okay, watch that video next. But I do think that there's going to be a free fall at least from here to here. Okay, now why I do not really like Ripple is because of this candle right here. Okay, this very nasty candle right here. So let's break down what this candle represents. Okay, this candle represents that price at one point in time it went up. If there were a lot of bulls who bought off this level, they pushed price up, but only to be met with resistance, or rather sellers who were selling heavily into the highs. So this is really a fake out. This is what I would say is a very strong bearish momentum down, and this candle right here is a candle that I really do not like to see if I'm going long. So if you went long here, then really you are going against this candle, and this candle is a very ugly looking candle, and I know many people probably lost money if you went long. In fact, even if you short here, you would have also lost money because price went to push up much higher. Okay, of course, if you use a wider stop loss and you put your stop loss here, then that's a different story. But for most people who went short here, chances are, they put their stop loss just slightly above and then they get triggered out at a stop loss. So this is really very bearish. I want you to be very careful if you are trading this. Okay, if you have not entered, you might want to look for selling opportunities instead of buying it. Okay, I know you always want to buy low, but this right now is just very bearish. So now before I end off this video, I want to give you this price level 0.69 and how I got this price level. Okay, so it's nothing magical. So you can see that this is the double top pattern. Okay, this right here is the double top pattern. So one of the ways you can use a double top pattern is to use it as projection. So just basically measure this entire double top pattern, something like this, and then you drag it down. You drag it down to the neckline, and you can see that if you drag it down to, let me just get the level correctly, drag it down to the neckline somewhere here. Okay, you can see that this is the level. Okay, to be exact, the level is not exactly 0.69, but just for simplicity's sake, just for you to remember it easily, I say that 0.69. Anyway, it's good to have a buffer, but this is the price projection level of the double top pattern. Now, just be mindful of what this means. I'm not saying that price will certainly fall below, but I'm saying that this is just one way of projecting price, and you have to be careful if you are buying here. You know, in fact, you shouldn't even be buying. If you are buying, then I do not know why you're buying, okay? Because even if you want to buy, wait for the momentum to change, okay? I'm not saying that you can't buy, but you have to see that the momentum is changing first, at least on the H4. Wait for a series of higher highs, perhaps something like this. Something just like this, then you go long. Okay, do not be a hero and start trying to catch market bottoms by catching a falling knife. That's not a very wise way to trade, and if you don't learn this lesson, then the market's going to punish you, and then you're going to get stopped out and you're going to lose a lot of money. Okay, so that's not what I want for you. So please, if you want to go long, please wait for a change in trend. But if you want to go short, I think it's probably looking good to go short, and you want to be very careful of this price level and this intermediate support right over here. Okay, so that's all I have for you in this video. I hope you got a ton of value. If you are new and you have not yet subscribed, do appreciate you could hit that thumbs up button and subscribe to the channel. I also have a trading guide for you which teaches you the fundamentals of trading, such as how to draw support and resistance, the 4 stages of the market, the candlestick patterns, as well as the MPE trading strategy. If you lost money because you bought here and you don't understand how to read market structure or price action, then please spend the time to go through this guide, because this guide will save you so much money. It will make sure that you do not lose a lot of money by trading against the trend. Now, the link to this is in the description down below. It will take you to a page just like this. Input your email and we'll email it to you. Okay, that's all I have for you in this video. Thanks for watching. I'll catch you in the next video.